So Royal Wolf's been one of the biggest contributors to the performance of the Ethical Fund over the past 12 months. In fact, probably over the past 18 months since we got involved with the company at its IPO back in May 2011. So when this company came to list, we had a good look at it, as we do all listings. We looked at management. This is part of our investment process. They're very experienced, good guys in the industry, over 20 years in experience in that industry. We looked at the balance sheet, which was adequate and was being enhanced through the IPO. We looked at quality of earnings and business and recurring earnings in the business, and we had a lot of confidence that this stock met our stock investment process. When we looked at valuation, a couple of things jumped out at us when we assessed the business, through that IPO process. A couple of interesting things to note about Royal Wolf. What does it do? It's a container hire business, and it also sells containers to people. But the thing that's interesting within Royal Wolf, you probably see Royal Wolf containers going past when you're on the bus, or when you walk down the street. There's one in Pitt Street in Sydney here. They've got a fleet of 35,000 containers, which they lease out to people for around $5 a day. So it's quite a cheap product to rent off them. And the key things in the business are that we really liked about it. When the company invests new capital, that new capital gets paid back within about 2.5 years. So there's a very, very high incremental return on capital within this business. And the other thing that's interesting is that when a customer rings up and wants to hire one of these containers, they 90% of the time, when they say they will bring it back at a certain time, they don't. So they end up keeping the container for a lot longer than they think they will initially. And that contributes to the ongoing cash flows and longevity of earnings within this business. So the company came to market, raised money to pay off some bank debt, which really enhanced their ability to grow the business. They were in private equity hands beforehand. Listing on the stock exchange was a significant advantage in their own business and their ability to grow. We were quite attracted to that, and the valuation at the time was reasonably cheap. So I owned this stock within the Ethical Fund. It was a top 10 holding last year and remains just outside of that today. As I said, we've got a lot of confidence in management's ability. They've taken the plan that they brought to us at the IPO and executed it very, very well. As we sit here today, the stock's gone from an IPO price of $1.83 to around $3 a share. So it's been a big outperformer for us. And Perpetual at the IPO was the biggest institutional shareholder in this company. We remain a large shareholder today. As I said, we're backing the management here. And I think the valuation's relatively attractive, although it's changed a lot through the course of almost the past 2 years.